All right. Thank you guys. Thank you again for joining me. Another session in our series Forex Basic to Pro. Thank you so much for those of you that have been watching our videos, liking, I've been dropping some comments. We appreciate you. I want to promise you that we are taking all your comments on board. Thank you so much again for joining another series, another session in our series. My name is Michael Martins FX. I'm a UK-based professional and profitable Forex trader and a professional and profitable property investor. On this channel, we talk about Forex, properties, and life in general. How we can be able to what? Amass wealth from Forex and invest in properties or any other ventures that you desire to do. So thank you again. I'm super excited because we are making so much significant progress in our course. I promise you that on this channel, if you have known nothing about Forex, or if you know nothing about Forex, this channel is to take you from basic to pro. And that's why I want to stick to this channel. Everything that you're going to go out there to learn with thousands of pounds, we're going to be releasing everything free of charge on this channel. So you want to stick around, join this boss, because you will not see this kind of content free of charge out there. So now, we've been discussing some amazing topics so far, and I want to enjoy you if I just join up for the first time. Guys, go back to our videos. I put everything on a playlist such that once you watch one, they automatically suggest the next one to you. It's important for you to keep abreast of all the previous topics, guys, because very soon we're going to be going into more technical topics. And the more you get yourself grounded and brushed up with all the previous topics to date, the better for yourself. So thank you again. So let's get to it because we don't have much time on our hands. So today we're going to be discussing a very super interesting topic. So let's go to our slides and then see what we got for ourselves there. Now today we're going to be talking about exchange rates. So many of you've heard about the word exchange rate, right? But then to some of you, your understanding of exchange rate is just basically for your travels. But when you are a Forex trader, every bit of this begin to make sense to you because you begin to think about it in terms of how can you benefit from the exchange rate. And that's how we think as a Forex trader. You see, when you are a professional Forex trader, the way you perceive these whole things about Forex finances is completely whole different, right? To a layman, their understanding of exchange rate is just for their travels, right? They want to go to another country, and as such, they want to do some exchange. But as a professional Forex trader, your perception is completely different. You are thinking of how can you benefit for the up or down or pounds or dollar. That is where you think. And that's what makes us so unique. And that's why we are completely different species as professional Forex trader. So right now, we want to look at what is exchange rate. I've taken my time, guys, to prepare these topics. And before you jump on this topic, if you haven't seen one of our topics titled, What are currency pairs? What are currency pairs? If you have not seen that topic, I want to enjoin you. You need to go back and see that video. What are currency pairs will bless you, and it will give you a more grounded understanding of this topic that we're about to discuss. This is a very quick and short topic, but then you need to go back to the previous video for you to be able to have a better understanding, because the next phase of the topic we're going to be discussing is going to be very linked to this one. And this topic, which I actually referred you to, which is what are currency pairs. Okay? Now, like I usually will tell you guys, your pen, and make sure you have a notebook. If you have your popcorn and a cup of tea, coffee, you want to have it right in front of you. In Forex, let's get to it, guys. Okay? If you haven't subscribed again, don't forget, guys, go and subscribe. Michael Martins FX on YouTube and on TikTok and on Instagram, Michael Martins FX. Subscribe, follow us, like our videos so that YouTube algorithm can suggest it and maybe obviously be encouraged to produce more. And then make sure you turn on the notification bell. I've spoken to some people and then they ask me, oh, why is the notification bell and all that? It's so interesting that in this now this season, some people are still asking about where is the notification bell on YouTube, but it's fine. So turn on the notification bell so that whenever we drop any of our videos, you'll be among the first to be notified. In Forex, an exchange rate is the price of one nation's currency when exchanged for the other. Okay? And don't forget what we said in the previous videos, that one of our previous videos, that you see, a currency of a country represents how strong economically that country is. How strong economically the country itself is. So when we are talking about a country currency, we are talking about the strength, the economic strength or power of that country. And that is why in Forex, current currencies are coded in a different form. For instance, let's look at this. Let me bring back my annotation. Now, let's look at this. USD. The first two letters in Forex, the first two letters, because this is what we call currency coding. There's one of our videos, guys, that is titled Currency Coding in Forex Market. Okay, you want to go and watch it as well, so that you understand when you start trading, when you start going to your chart, you start seeing these things, they'll begin to make sense to you. Because you will not always see the full name of the currency. Sometimes or most times you see the code's name, yeah, the coding or the coded form. Now, USD, one thing you should understand, guys, is that the first two letters, because the currencies in Forex trading are usually in 3 letters, mostly in 3 letters. And the first 2 letters, guys, they represent the name of that country, US, United States. And the last letter represents the currency. Okay, remember, the first 2 letters represent the name of the country, and the last letter represents the name of the currency of that country. Okay, take note of that. Now, there's a full video, guys, on this. You need to go back. See, one of the reasons why I say you need to go back and watch our full video. Okay, all our full videos, so that I can have a better grasp of all these things we're talking about. Now, for instance, right, we're looking at point 2, okay? 2 notes, the second note. For example, remember what was said, the first point, which is this one, says, in Forex, an exchange rate is the price of one country's currency when exchanged for the other, okay? So, for example, we have an instance here. If an exchange rate from US dollar to euro is 1.10, what does it mean? It means that for every $1, okay, is exchanged for 1.10 euros. Okay, now this is how you normally will see it. You can see USD. Okay, you can see USD. You can see USD. Okay, let me clean this one, guys. Let me clean this one. So this is how the currencies are usually quoted. When we go to our trading terminal, I'm going to show you soon, okay? So our trading terminal, what you see, something like GBP USD, GBP USD, okay? GBP USD. Now, if you see something like this, and you see 1.0, for instance, okay, what this means is that for every one, sorry guys, what this means is that for every $1, it costs, okay, so for every £1, sorry, GBP is for pounds, right? Great British pounds, yeah, GBP USD. If you see a quote, which is the way normally quoted, this is the way they are normally quoted. What this means is that for every £1, you will need $1.10 for every £1. So an exchange rate is usually quoted in relation to a single unit of the base currency. Okay, you see that on its own is another video. What is a base currency and what is the quoted currency? Okay, so when we look at the example that we have here, in this case, guys, okay, we have USD euro equals 1.10. What does that imply? That implies that for every single unit of the base currency, in this case, USD is the base currency, Euro is the quoted currency. So let's go to write our point that we have here. So let's read our points we have here, guys. Let's read this point. Yeah, let's read the point together. For example, if an exchange rate is from US dollar to euro if an exchange rate from US dollar to euro is 1.10, right? This means, or $1.10, this means that $1, remember what I said to you, the base currency is the US dollar. The first currency is the base currency. It's called the base currency. In this case now, US dollar is the base currency. Euro is the quoted currency. And that's what this is explaining. It means that for $1, right, it can be exchanged for what? $1.10. Okay, so it means that $1, right? $1 for you to be able to exchange $1 to euro, right? You need $1.10. Does that make sense? What does it mean? It means that dollar is more expensive than euro. That's what it simply means. So there's a full course, guys, on this. So you need to go back to our video. You need to go back to the previous video. I think we have about 1 or 2 videos that we did justice to this, so that you can have a better understanding. So if you are struggling to understand, because in this topic, what we intend to just discuss in this topic is to talk about how exchange rate itself is obviously structured, and then looking at the impacts, what actually impacts the exchange rate. Okay, for full video as to how to understand the relationship between the base currency, or what a base currency means, and the quoted currency means, you need to go back to one of our videos that we've done. I think we did that about 2 weeks ago. You have a better understanding. So guys, take notes. From now henceforth, you want to understand that whenever you see an exchange rate is structured in this form, what it simply means is that, right, that's a single unit of the base currency to be exchanged for the quoted currency, you will need this amount to get the single unit of this base currency. Now, let's say, for instance, right, instead of $1.10, you have, let's look at another example. Let's say, for instance, $1.10. Instead of $1.10, you have, let's bring it down to, okay, let's say you have, okay, let's say you have 0.9. Okay, USD, okay, euro is 0.9. What does that suggest to you? In this example, we learned that US dollar is more than euro, because the way this is structured, it means that for a single unit of US dollar, you will require $1.10 if you have to convert it to euro. Yeah. In this case, you have the figure is slightly lower. What does it mean to you? Right? So it means that for a single unit means 1. For a 1 unit of US dollar, you require 90 cents in order to exchange it to euro. What this means, guys, is that euro is stronger than dollar. Does that make sense now? It means that euro is stronger than dollar. In this example, dollar is stronger than euro, because what this example means, 1 unit of this is 1.10 of this one. But in this case now, 1 unit of this is 0.9 of this, so which means dollar is less than euro. So you just need to have this understanding. The understanding of this will enable you to be able to put you'll be able to understand what you are doing in the market in a nutshell when you are trading. Okay. Now let's look at another key point here. Okay. Exchange rate impact the cost of imports. We know that. The competitiveness of exports. We know that, right? The higher the exchange rate, we know the impact it can cause either to import or to export, depending on which country you belong to, right? Which of the countries in the parties to the transactions you belong to. Then we said the exchange rate impact the cost of imports, competitiveness of the export, foreign investment, and inflation, right? Understanding how they work is crucial for making informed financial decisions. You see what I was saying to you? That as a Forex trader, when you hear exchange rate, your perception, your thought is completely different to a layman who is only thinking about, oh, I want to travel. You are thinking about how can you benefit from either the rising or the falling of the currencies. Okay, so this is very key. And obviously we have a picture of a typical exchange rate. Here we have the buy and the selling price. Okay, then we have the China yuan, we have the buy price and the selling price. In one of our courses, subsequently, we're going to be talking about the bid and the ask. So you'll be able to understand the terminologies that we use in the Forex markets. Okay, so hope that makes sense to you guys. We have other interesting topic in front of us. So I want you to make sure you catch up with our previous videos so that this one will make a better understanding. You have better understanding of this particular topic, because that one that we had, I think the topic is what are currency pairs. We want to go back to that topic. We'll go through it and come back to this. You'll have a better understanding of this topic. So I hope that makes sense. All right, guys, then thank you so much, guys, for your time. Remember to subscribe, like, and share. Don't forget to turn on the notification bell so that whenever we drop any of our videos, you'll be among to be first notified. Thank you very much. Until then, I will see you again. Until then, I remain Michael Martinsfx. Bye, guys. Bye, guys. See you later. Bye.